Elon said SpaceX's year-end number is not a question mark. Sam Cole, the CFO, defined it. ARR means expected revenue in December 2026 times 12. If you hold SpaceX or you are thinking about buying near $1.6 trillion, that label is your buy decision. They want about $100 billion on that run rate. Current pace is about 31% of the way. Q2 2026 revenue hit $7.8 billion, but CapEx is about 131% higher than the revenue. Elon put $1 trillion revenue into 2030, while the run rate now is about 0.03 trillion. Growth rate was real. The year they sold you is still 1 month times 12. One fat month can wear a year. I have a master's in aerospace engineering. When they count a year that way, I go straight to the segment that is supposed to fund the story. Connectivity made $1.7 billion of operating income on $4.3 billion of revenue. 12 million Starlink users. ARPU flat at $66. There is not a hollow quarter under the profitable business. The impact at a valuation of 1.6 trillion is simple. Starlink is earning. You are still being asked to pay a trillion class price while the year they sold you leans on 1 month's math. Elon went further on the same call. That year-end run rate is what they hit if they basically do nothing. $1.7 billion of operating income. A year Elon treats as a sure thing. Which one are you paying $1.6 trillion for? Starlink worked. CapEx is the other clock. Same quarter Starlink earned, SpaceX spent hard. Total CapEx was about $18.4 billion. AI alone was $15.8 billion. Against $7.8 billion of revenue, that is about 131% more spent than made. The CFO said on the call, you should think the next 2 quarters look similar on CapEx. Cash is leaving at a rate that outruns the sales line, while management sell a year that is still ahead of today's pace. I'm not saying the spend is fake. The CFO also said new AI CapEx is showing less than a 1-year payback as they rent compute. AI adjusted EBITDA flipped positive this quarter to about $1.1 billion after a loss last quarter. That is the honest other side. Hosting started showing operating profit on their adjusted EBITDA line, not only losses. But payback talk and cash living are not the same test. One is a return claim. The other is $15.8 billion of AI CapEx in 90 days, with more guided like it. Starlink funded the story. CapEx is racing the story. So can the year-end run rate even close from here? Even a generous cursor number does not carry SpaceX to the year-end target. A $100 billion year from month times 12 needs about $8.3 billion of revenue in December alone. Q2 was $7.8 billion for the whole quarter. That is the step. Cursor is not in the Q2 financials. The deal is still expected to close in Q3. It is a $60 billion all-stock deal priced off SpaceX's volume-weighted average close for the 7 trading days right before close. Bloomberg reported Cursor around $2 billion annualized by February 2026. Forbes put it around $4 billion by May 2026. Some coverage cited the company guidance above $6 billion by year-end. Let us be more generous to it. Even if Cursor were at $10 billion a year, higher than those reports, there is still about 1/10 of a $100 billion year. That heavy lift has to be Starlink plus cloud hosting and the rest of SpaceX. On hosting, the CFO said they already contracted another $6.7 billion of cloud services revenue in the first weeks of the third quarter, over a 6-month period that starts ramping in October. The filing still says those cloud deals can generally be ended on about 90 days notice after the ramp. So the upside is a signed contract, not cash you can bank for years with zero exit risk. Last full year, SpaceX did about $18.7 billion of revenue. The core is selling a year that is several times that size counted from December. The pullback is the balance sheet. They ended the quarter with about $100 billion of cash and marketable securities. Backlog about $47.5 billion. The IPO and the bond deal loaded the balance sheet. They can fund this capex for a while without a new primary raise tomorrow morning. $8.3 billion needed in one December month. Even $10 billion from Cursor leaves most of the gap. Who closes that gap for you? So the bridge is Starlink and hosting, not a coding tool that is not even closed. Then Elon stacked a bigger number on top. If this breakdown is useful, hit like and subscribe. I go 3 layers deep every week. The call did not stop at the year-end run rate. Elon said the internal plan for $1 trillion of revenue, not run rate, revenue, moved from 2031 to 2030. He left a non-zero chance of 2029. Today's pace is about $0.03 trillion. Same problem as the December math, bigger zeros. Now, my opinion is this. Growth is real, capex is huge. The year-end number is still mostly talk until the months show it. If December gets close to the target, the stock can rise first because markets price the future early. That can make a cheaper entry harder. But if the December run rate lands around $80 billion or clearly under it, for me that year count failed in public. That around $80 billion is my rule, not a company guide. August 6, 2026 is the first day early holders can sell a slice of locked shares, which is the day this video is published. They do not have to sell. SPCX stock has been depressed for about 6 weeks before this report. Near term, I think the price can hold or even go up a bit. I think a big drop might only show when the bigger unlocks come later in Q4 2026. I still wait near $1.2 trillion to end. Q2 showed growth, but it did not show a breakthrough big enough for me to chase $1.6 trillion. If they later prove the numbers and the stock has already left $1.2 trillion behind, I set a new weight line higher with more confidence. On the hardware side, I watch for Starship with both the V3 booster and the second stage catching on the tower. Until then, I treat soft revenue talk as soft. We know SpaceX is expensive on valuation. The question is how expensive? We compare it next to a similar stock. On trailing 12 months, Rocket Lab is around 66 times sales. SpaceX sits around 72 times sales. Almost the same multiple. So why do I buy Rocket Lab and wait on SpaceX? Because Rocket Lab is worth about $45 billion. SpaceX is $1.65 trillion. For me, I'm more comfortable with a smaller company growing from $50 billion to $200 billion rather than asking a $1.65 trillion company to become a $6 trillion from here. That is my preference, not a law. Now, what is not reported in the earnings? Churn is still missing from the filing. ARPU held at $66. Net adds look strong. Without churn, you cannot fully see how clean Starlink's cash is. Soft year-end number. Soft $1 trillion target. Hard capex. On your screen right now, which one are you actually buying? Here are 3 things to watch. First, Q3 revenue and how close that pace sits to the December year-end target. Second, the next capex number, against the CFO's line that the next 2 quarters look similar to about $18 billion. Third, the next Starship flight that tries to catch both the first stage and the second stage on the tower. That is the hardware change I watch for. Growth was real. The year can still be one fat month counted 12 times. When December's month get multiplied by 12, will you be buying a company or one fat month? I paid for The Economist just for one Elon interview. The decade weight on Tesla and SpaceX is in that talk. Click here to watch it now.